The SEC files charges against Binance entities and its founder, Changpeng Zhao. I'm Rosemary Miller here with Michael Del Castillo, a senior editor for Forbes Digital Assets. Thank you so much for joining me today, Michael.
Thank you, Rosemary. It's a pleasure to be here as always.
So, Michael, what is your overall assessment of this lawsuit?
It's the beginning of a long process. The SEC deciding to go after the largest cryptocurrency exchange in the world is been a long time coming. The exchange itself is the most heavily funded, deeply pocketed exchange in the world. It is bigger than most banks in the world. And CZ, the CEO, has made it very clear that they plan to defend their company. So whether or not the charges in the lawsuit are true, regardless of what the cryptocurrency world might learn as a result of the process and their standing regulatory speaking, we are going to be in this for maybe years before the end is over.
Oh, my years.
Yeah.
Well, Michael, you've done quite a bit of research and reporting on Binance. Has anything, seemed kind of off to you through your reporting?
Yeah, well, we back in 2020 got our hands on a proposal for Binance to create an entity in the United States that they described in the paperwork as the Tai Chi entity that would, metaphorically speaking, use the government's own weight against it, which is to say that the U.S. entity would be there to give all appearances of playing well with regulators, meanwhile, literally just trying to keep them occupied, trying to distract them, literally outmaneuver them, have a bigger staff, have more human beings involved, while the rest of Binance was elsewhere doing other stuff. That other stuff included the CEO, CZ, recommending using VPNs so that customers who had been blocked and prevented from accessing the site could still access the site. Now, that's something that you can technically do anywhere for any site. But it was the first time that I had seen a high-profile CEO actually advocating for users or potential users to do that. These documents, importantly, they have come to be known as the Tai Chi documents, were a proposal. And we made it very clear in our reporting in 2020 that there was no direct evidence that anybody had ever voted to implement this proposal. We were very clear that we had no firsthand evidence that the vote for this proposal had actually ever happened and that any of it had been implemented. But what we were able to do was take a look at item after item after item of things that we did know, of organizations that did exist, of paper trails that we could find, that looked an awful lot like what has come to be known as the Tai Chi entity. So we didn't exactly conclude in any sort of formal sense that what is Binance US now, it was then using a different name, was in fact the Tai Chi entity that had been set up disingenuously to distract regulators while the parent company could go on doing business as usual. But I think we did leave it up to the audience to kind of like come to some of their own conclusions. And it took a while. In fact, there was a pretty big space of about 2 years where there was very little reporting on this from any news organization. There was a little bit here and there. And then in 2022, you just started seeing it left and right. It was like almost overnight, the world decided that something was going on with Binance.
And do you think FTX had something to do with that because of the separation of FTX and FTX US and it was all?
Oh, that's a great question. It's funny because Binance was an early investor in FTX. And in fact, it was a pretty big deal in crypto land. when CZ and Binance decided to divest themselves of their stake in FTX. I think that there's a good chance that CZ wanted to see some diversity in the ecosystem, believed that competition was good for everybody. But at some point in time, FTX got maybe a little too big for their britches and Binance divested. Now, the reason why I think that's important is because for a year or two, like, not a short time, but not a long time either, FTX was described as kind of like the compliant alternative to Binance. CZ had long been taking the stance that Binance doesn't have a headquarters, just like Bitcoin doesn't have a headquarters, Binance doesn't have a headquarters, leaving open a lot of questions like who's paying taxes, if something goes wrong, which government is going to get involved, that sort of a thing. He had been advocating for using software that essentially would help customers evade regulations, or regulatory detection, I should say. And Sam Bankman-Fried, CZ's yin and yang, was seen as kind of like the regulatory alternative. And so the structures themselves were actually very, very similar, even to the point where they both had a token. The tokens were both used very similarly to sort of incentivize behavior. And in a day and age where it's very easy to just pick up and leave and go to a competing exchange and take all your money with you, these tokens at both exchanges were designed to keep you there. They were to make the exchange sticky, because if you were involved in a relationship with your exchange that was resulting in you getting some sort of asset back that was valued on the free market, you would be less likely to leave. So I think that Binance's similar structure to FTX's similar structure definitely begged for closer analysis. And then the role that CZ played, remains, there remains debate as to whether or not he did it on purpose, but CZ publicly stated that he was going to be selling all of Binance's FTT token. I'm sorry, all of FTX's FTT token. And that public disclosure, a number of dominoes later, indirectly or directly contributed to the collapse of FTX. So that 1-2 punch of the organizations having a very similar structure, and then CZ playing a pivotal role. Exactly what that role was remains to be seen, but a pivotal role in the collapse of FTX definitely must have just sent regulators red flags up all over the place. We've got to take a closer look.
So speaking of domino effects, what do you think is going to come after this? I mean, we have the CFTC coming after Binance, now the SEC, and we even had Elizabeth Warren coming after Binance just a few months ago.
Yep.
What's next?
So it has long been thought that the collapse of FTX, Digital Currency Group, which is one of the biggest investors in the space and powers some of the most promising efforts at a Bitcoin ETF with billions of dollars of the cryptocurrency on their balance sheets, and Binance. These three, if they were to collapse, it could be a possible extinction level event, but not for the crypto industry itself, but for centralized control over the crypto industry. And some people in the Bitcoin world, some decentralization purists, are rooting for that. They say, if you read Satoshi's white paper describing Bitcoin, there was no talk about exchanges. There was no talk about billion-dollar companies doing hundreds of millions or billions of dollars worth of volume a day. It was all supposed to be peer-to-peer. And so what the crypto industry looks like in a post-FTX world, I think we're starting to see right now. What it looks like in a post-Binance world we have to start imagining, because this is, it doesn't look good. There was a new CEO put in place today, before the announcement was made that the SEC was going to be suing them. So Binance is making plans to be around over the long haul. CZ has said they plan to fight to defend themselves. I think that could be a years-long defense, but we really should start to imagine what crypto would look like without these big organizations. Digital Currency Group has also been underneath its own tribulations, also relating to a number of financial events that took place in 2022. Digital Currency Group was once thought of as invincible and unsinkable, and has been going through its own turmoil. So if you put those three together, I think that we're in a situation where it's the end of an era. Even if Binance comes out intact, even if Digital Currency Group comes out intact, even if somehow FTX emerges from this bankruptcy, the industry is going to be forever changed. And the role that these centralized institutions play in letting investors move their cryptocurrency from one place to another is seriously going to be questioned. It even reminds me, going all the way back to the beginning, one of my favorite talking points, but I think it's just so important, is that Satoshi Nakamoto, in the Genesis block of Bitcoin, warned against the risks of big banks being bailed out by governments. And he created, or they or she created this technology as a way to let people move value back and forth without needing to rely on big banks or governments. And I don't think that the users of these assets really, or at least the early users of these assets, ever wanted to have any middleman, right? Mm-hmm. I think that FTX and Binance, at very least, have proven themselves to have a lot of the same risks that banks have, even if they don't have the same regulatory obligations. And we're going to have to see whether or not the industry needs them or not.
So personally,
yeah,
I don't know how to trade cryptocurrency without that middleman.
Yes.
So how does one actually do that?
Well, it's a great question. I think that one of the lost opportunities that happened with the rise of big centralized crypto institutions is there was an explosion of financial literacy in the early years of Bitcoin, where people that had never thought about how value is transacted digitally, people that had never thought about what counterparty risk means, people that had never thought about the fact that only a small percentage of their assets are insured in banks, were learning all of this stuff. And they were learning how to build a financial world that didn't rely on that. It's perhaps no big surprise. The easier alternative seems to have won out, at least on a numbers-based game, right? Most people, and I will say myself included, like to have somebody that they can call if they forget their password.
Yes.
I do it all the time, right? Like I'm on the phone with my bank or whatever investment agency I'm using. I don't want to mention any names. And I forget something or I misplace something and I have to get an expert on the phone to help talk me through something. I like having that. It makes the whole process easier, and it takes some of the burden of responsibility away from me and puts it into these third parties. But there is a world that exists where the individual has more responsibility, not only for their own assets, but for moving their own assets. It is getting easier. In the early days of Bitcoin, there were barely even wallets. I mean, technically, there was a time when there wasn't actually even a wallet, and you really had to be able to code to do anything with Bitcoin. But there was, wallets that were built that let you custody your own assets. You would have a safe place to store the assets, but only you would have a key that simplified the act of owning assets. And there has been increasing layers of software that have been written to make the process easier and easier. It shouldn't be overlooked that Binance itself was a big and is a big advocate of this process. They have what is called a decentralized exchange, or a DEX. These decentralized exchanges are perhaps the most sophisticated, latest development of this process of abstraction, where early on, you had to be able to write all the code on yourself to move Bitcoin. And then you got a basic wallet, and you got more and more layers of service that were written as software. Now entire exchanges can exist that you are completely self-empowered. And Binance itself is helping build those exchanges. So one of the answers to what the world looks like in a possible post Binance, possible post FTX world is these decentralized exchanges that have proven much more difficult to shut down, provide a lot of the same services, but the only thing standing between you and a counterparty is software that no single person has any control over.
So that's kind of long term. What about short term? What do you think is going to happen with the market?
Oh, well, we're definitely already seeing price movements. In particular, I mentioned that both FTX and Binance have their own tokens. The Binance token took a meaningful pounding today. And typically, price drops like this are not sustained. They'll be over the course of a day, 2 days, maybe a week. Things will eventually stable out and occasionally even recover. I think that there's a good chance that the collapse in price that we saw today continues at least for another couple days. Now, recovery of that price is going to depend heavily on how Binance's relationship to that asset plays out. And that has been up for some debate. In fact, I don't want to say anything, too certain right now, but there are a number of investigations underway to take a closer look at Binance's relationship to the Binance token. If it turns out that Binance really does own the vast majority of those assets, if they are actively exercising influence over the price and there's a stumble at the executive level, it could take a lot longer for those assets to recover.
Thank you so much for joining me today, Michael.
Thank you so much, Rosemary. It was a pleasure to be here.